Section 6. FHA Loans and HUD Financing Options. Connecting HUD's market role to FHA financing. In the last section, we explored HUD's broader role in the real estate market, including homeownership, neighborhood stabilization, affordable housing, and community development. Now we move into one of the most important parts of the HUD home process, FHA financing. If HUD homes are the vehicle, FHA financing is often the fuel that makes the transaction possible. Many HUD buyers are first-time buyers, moderate-income households, or buyers who may not qualify for conventional financing. FHA loans often become the bridge between renting and homeownership. Agents who understand FHA financing are better prepared to answer buyer questions, avoid financing mistakes, and help transactions move toward closing. What is an FHA loan? The Federal Housing Administration, or FHA, operates under HUD. FHA does not directly lend money to buyers. Instead, FHA insures loans made by approved private lenders. This insurance helps protect lenders if the borrower defaults. Because of that protection, lenders may be more willing to offer financing to buyers who need more flexible loan options. FHA financing is commonly used by first-time buyers, buyers with limited savings, moderate-income households, buyers rebuilding credit, buyers needing flexible underwriting standards. FHA financing has helped millions of Americans achieve homeownership. A real-world FHA buyer story. A buyer named Jasmine wanted to purchase a HUD home in Mesa. She had stable income and good rental history, but only had enough savings for a modest down payment. A conventional lender told her she needed more money down. Jasmine became discouraged and thought homeownership was out of reach. Then her agent connected her with an FHA-approved lender. Because of FHA financing, Jasmine qualified with a lower down payment, more flexible credit guidelines, and was able to purchase a HUD home she thought was impossible. This is why FHA financing matters. How FHA financing works. The basic structure is simple. A private lender makes the loan. FHA insures the loan. The buyer repays the lender. If the borrower defaults, FHA helps protect the lender from certain losses. FHA loans may allow down payments as low as 3.5%, flexible credit standards, higher debt-to-income flexibility than some conventional loans, gift funds for down payments, down payment assistance compatibility. Because many HUD buyers use FHA financing, agents should understand these basics. The relationship between HUD homes and FHA financing. HUD homes and FHA financing are closely connected. Many HUD homes begin as properties purchased with FHA-insured loans. If the borrower defaults and the lender forecloses, HUD may acquire the property after paying the lender's insurance claim. HUD then lists the home for sale through HUDhomestore.gov. Many of these homes may later be purchased again using FHA financing. The cycle often looks like this: FHA loan, default, HUD ownership, HUD resale, new buyer financing. This is why FHA knowledge is critical when working with HUD properties. FHA financing and HUD property classifications. HUD property classifications directly affect financing options. Insurable. These homes typically qualify for standard FHA financing without major repair concerns, i.e., insurable with escrow. These homes may qualify for FHA financing with repair escrow funds set aside for limited repairs after closing. UI. Uninsurable. These homes do not qualify for standard FHA financing because of significant repair issues. UI properties may require cash. Conventional financing. FHA 203K rehabilitation financing agents must explain these classifications clearly because financing misunderstandings can quickly derail a transaction. HUD incentive programs for buyers. HUD encourages homeownership through certain buyer programs and incentives. One well-known program is Good Neighbor Next Door, which may help teachers, firefighters, EMTs, law enforcement officers. Qualified participants may receive special incentives when purchasing eligible HUD homes in revitalization areas. HUD has also offered programs such as $100 down payment incentives, FHA repair escrow options, FHA 203K rehabilitation financing. Agents should never promise incentives without verifying current HUD guidelines and buyer eligibility. Understanding FHA 203K rehabilitation financing. The FHA 203K rehabilitation loan can be especially useful for HUD homes needing repairs. Instead of buying the home and then separately finding repair money, a 203K loan may allow certain repair costs to be included in the mortgage. This may help buyers finance repairs such as flooring, roofing, HVAC, plumbing, kitchen updates. For example, a HUD home classified as UI may still be possible for a buyer using FHA 203K financing. This can create opportunities for buyers willing to renovate. Basic FHA loan requirements. FHA financing is flexible, but buyers must still qualify. Common FHA requirements may include minimum credit standards, stable income, acceptable debt-to-income ratios, employment verification, FHA appraisal requirements, owner occupancy requirements. Agents should not act as loan underwriters. The best practice is to explain general financing concepts and direct buyers to qualified FHA-approved lenders for approval questions. FHA appraisals and mortgage insurance. FHA appraisals review both market value and basic property standards. The appraiser may look for health and safety issues, structural concerns, missing systems, exposed hazards, peeling lead-based paint in older homes. This is one reason some HUD homes are classified as UI. Buyers should also understand that FHA loans usually include mortgage insurance, including an upfront mortgage insurance premium and monthly mortgage insurance. Agents should explain that mortgage insurance is common with FHA loans, but should avoid quoting exact rates or giving financial advice outside their expertise. A common financing mistake. Agents make an Arizona agent once told a buyer, "You'll definitely qualify for FHA financing." Later, the buyer learned they did not meet the lender's debt-to-income requirements. The transaction failed and the buyer was upset. Agents can explain financing concepts, but they should never guarantee loan approval. Under AAC R4 281101A and R4 281101I, licensees must communicate honestly and exercise reasonable care. The safest approach is to educate buyers generally and refer them to qualified lenders for approval decisions. Arizona contract considerations. In Arizona, financing timelines and contingencies may connect directly to FHA requirements. FHA financing may affect appraisal issues, loan approval timelines, repair concerns, financing deadlines, earnest money risk. HUD transactions may also require specialized HUD addenda and contract packages separate from standard Arizona forms. Agents must understand how these timelines work together so buyers do not miss deadlines or risk their earnest money. Why FHA financing remains critical today. In today's market, affordability continues to challenge many buyers. FHA financing remains one of the most important tools helping buyers enter the housing market, purchase HUD homes, and build wealth through homeownership. For HUD buyers, FHA financing may be the pathway that makes the transaction possible. Agents who understand FHA financing become stronger advisors, better communicators, and more valuable professionals for their clients. As we continue through this course, we will build from financing fundamentals into qualifying buyers, bidding strategies, contract packages, and the HUD closing process. Online discussion. Question 1. Why is FHA financing especially important for many HUD home buyers? Answer. FHA financing may allow buyers with lower down payments, moderate credit, and flexible qualification needs to purchase homes they may not qualify for under conventional financing. Question 2. What is the difference between FHA and a traditional lender? Answer. FHA does not directly lend money. FHA insures loans made by approved private lenders, which helps reduce lender risk. Question 3. Why should agents avoid guaranteeing FHA loan approval? Answer. Loan approval depends on lender underwriting, credit, income, debt ratios, and appraisal results. Agents should refer buyers to qualified lenders.